everyone, Jessa here. Today, I will present to you our solution called Lease Management. Lease Management is part of a bigger solution called Property Management. Property management happens when a landlord hires the service of a property manager to manage the tenants, the lease, and physical maintenance of the property in exchange for a fee that is agreed by both parties. Part of his services is to look for tenants for the property, bill and collect rent from the tenants, and remit the same to the respective property owners. This is completely addressed by our property management solution. However, a new financial reporting standard was released, and this changed the way we account for lease transactions. So what is IFRS 16? IFRS 16 replaced IAS 17 and governs accounting for leases effective January 1, 2019. Just to give you an overview of the changes, for lessor accounting, lessors are still required to classify if a lease is an operating lease or finance lease. Operating leases are usually short-term and does not transfer any ownership rights to the lessee. For this type of lease, lessors are required to continue to recognize the asset in their books and recognize the rent revenue in the profit or loss section. Finance leases, on the other hand, are long-term, usually for the majority of the life of the asset, and substantially transfers ownership to the lessee. For this type of lease, lessors are required to remove the asset from their books and recognize a lease receivable equivalent to the present value of all lease payments. Compared to the previous standard, there are only minimal changes in the lessor accounting, because most of the changes are focused on the lessee. For lessee accounting, under IFRS 16, they are no longer required to classify the lease. Instead, they have to recognize a lease liability, which is equal to the present value of future lease payments. At the same time, they also have to recognize a right-of-use asset, which, as the name suggests, is the lessee's right to use an asset over the lease term. This is equal to the lease liability plus any lease payments made before the commencement of the lease and any initial direct costs, less any lease incentives. In addition, both lessor and lessee are required to separate lease from non-lease components. For example, in a property lease, some non-lease components may include cleaning services, common area maintenance, and security services. These non-lease components will not form part in the computation of lease liability and will be accounted for in the profit or loss section. We designed the new lease management module around this current financial reporting requirement, making this module IFRS 16 compliant. It can be used either as a lessee or a lessor, and more importantly, it simplifies the computation of lease liability, right-of-use asset, and any adjustments thereof.